Full steam ahead. The spy is back from the dead. What's going on? Yours truly, Hamza Hamid, here with Hamid Trades. And today, I want to talk about the trade that you could have made that would have given you 198% return on your investment in one day. Now, let's get right into it. Okay. So, what we're looking at here is the daily chart for the S&P 500. Now, yesterday's video, I drew a Fibonacci level from the most recent swing low to the most recent swing high, which was from December 3rd to December 27th. So from 317.13 to 323.80, which was the high that the SPY had made. We draw that here, and then we came to the conclusion. We came to the realization. We came to the momentous... Yeah, we understood that the 320 level was extremely important for it to hold, to maintain this uptrend, right? And I said that 320 would be a very key psychological level. Now, what the SPY did was exactly on point with that. It touched 320.15. It was 15 cents shy of the exact calculation here, right? Because 320 is just a very strong mental barrier for traders. Any number such as 300, 310, 320, 350, big numbers such as those are extremely important levels mentally. So that's exactly what happened. The SPY jumped off, pounded off of that level, and closed at 321.87, or 321.85, which was completely amazing. Right? It hit a high of day to 322.13, which was absolutely fantastic. After two long red days coming out of extremely oversold positions, the SPY found a bottom and began to reverse. Now, what I want to look at is the SPY in a few different time frames. Now, what I like to look at is the 15-minute time frame, right? And as we said before, the SPY was moving in triangles, right? It was forming many different triangles. So now intraday, I spotted another triangle, right? So now if you bought, right? If you bought into an option at if you bought the 320 options calls that expired today for December 31st, you could have bought them at 9:31 a.m. this morning. You could have bought them for 77 cents. You could have closed for $2.30. That is a 198% return based off of my analysis that I showed yesterday, showing that the 23.6% Fibonacci retracement level was extremely important. The SPY did just that. It held that level. You could have bought at that level, and you could have sold for momentous gains to start off the end of the year, to start off the new year. It's a really nice day today. Anyway, yeah, I'm not going to restart the video. Beautiful day. Cannot complain. So this is the 15-minute. So I started a new triangle here, right? So now I got the resistance level of today, and I made that the top level of this triangle, right? And the first bottom level of this triangle I made a bit more tight, right? And then the second level, it was towards the bottom here. You'll see it easier in the shorter time frames. But now what I'm looking at is exactly this. I make a perpendicular line from the line from the perpendicular side of the triangle, clone it, and then to find the new price target that I'm going to be looking at intraday, short term, is 322.87. You take this, you clone it, and then you paste it exactly at the first breakout point of the top of this triangle, and you get 322.87. Now, intraday and short term, it's very important to see that the SPY is gaining traction. It's very important because you'll see as the video progresses, I'm going to show you an analysis of silver and gold, and we can see in unison that when the SPY is doing very well, usually silver and gold do not. So there is an inverse relationship there, and it's very important that we can see that and we that we see that. Anyway, so yeah, now when we look at the 5-minute time frame on the SPY, all right, we see why I made this second bottom line to show support, right? The second bottom line, because at different times of the day, twice actually, it touched here, and a few minutes during the day and everything, it was trading below the initial triangular line. So I wanted to have two support levels, for example, going into the future. So at the moment, it is breaking out. It's exactly breaking out from this triangle formation, and we have that upward target. The 5 minute looks beautiful, but it is a bit overbought here, right? So now it's going to be interesting to see how it responds. We see that it overshot the 322, but it couldn't maintain those levels, and it fell back down below 322 to 321.89. Now that's important because we need to see if the bulls can maintain momentum, and they started the end of the year very, very strong. So that means that the first trading day of 2020 is going to be very, very, very interesting to see what happens. So now that is that. This is the SPY, really, and I'm gonna go back to the daily. Wow, I'm gonna go back to the daily real quick and show you guys exactly what I'm going to be looking at. So now it's going to be very interesting to see if the SPY can maintain this 23.6% level. If it can't, right, what we're going to be looking at is if it can hold the 38.2% level, which is at 317.43. If it starts teetering around that level, it can very well likely drop down to the 50% level, which is at 315.47. You can't really see it here, but I don't want to mess up anything here. But that's that level. Once it hits that and we can't maintain the upward trend, it doesn't look too good for the SPY, but it will look good for precious metals. And what I want to just look at one more time to really affirm the idea that the SPY is currently trading in very triangular forms. Right? We can see an ascending triangle that formed all the way in February of 2018. Right? We were in it this entire time, and then it broke out completely. And then there was another initial flush down that happened in January, late December, and another triangle. We formed that. We took the perpendicular line of each, right? So what we did was, to find the price target for each of these triangles, we took the perpendicular line for each, we cloned it, and we could have, so say for example it fell close to exactly where this ended up falling, right? So this triangle, for example, very, very important to look at this. This triangle back in February, you don't have any of this information moving forward, right? You don't know what'll happen. But you see a triangle is formed, you take this perpendicular line, you clone it, and you can, and in this market, it's very, very important to be bullish and bearish. You have to be completely non-biased to where the market will go, because money is to be made in either direction, right? And that's very, very important for us to know here. So you look at this and you say, okay, so an upward target would be at the breakout at the top of this line. So this top level right here is the resistance line. You put it at the top of this line, right? And then you get an upward target to 320. I showed it yesterday, but it's not, I didn't want to make it exact right now, just for the sake of explaining. You would have it to 320 exactly, right? There's that line, right? But now if you went down below, right, you would have this line fell essentially to 332.22. It's probably going to be off a few cents, but when you put it at the breakdown, you can do it at the break up and you can do it at the breakdown. When you do it at the breakdown, you still make it to almost exactly where it touched, because the low here was 333, I believe. 333.76, right? That was the low. So it was $1 off, essentially, which is completely amazing in my opinion, right? Now you do the same thing with this other triangle. You see another triangle being formed here. You look at the breakout of this potential triangle, and then you use the perpendicular line here, you clone it, you put it up there, and then you get the target of 300, which I also showed yesterday, 299.67, which is amazing, because that's exactly what happened to the SPY. The SPY ended up breaking out of this February 1st pattern to touch 320. It ended up breaking out of this January pattern to touch 300, which is absolutely astonishing. So I saw another triangle on the intraday. So I believe, based off of historical price movement, that the SPY will end up touching 322.87, which is essentially another extremely important psychological level of 323. Now, what's really important is that once at that level, it crosses over all of this resistance. So now you see this. So as it's approaching, it's going to see huge resistance at this level right here. So now if we break past that and then we rest upon that as support in the future, then we can, you know, consolidate. We'll see like a choppy movement maybe. We'll see like a testing of the support, and then we can see another move to 323. Now, if 323 is rejected, it'll end up probably touching back this point. But it's very interesting to see where the momentum is taking us now. So, without further ado, I want to talk about why you should subscribe and like and comment to my video. You know, like, I feel like I've given you guys a lot of, I feel like I've given you guys a lot of value, all right? So, I'm just going to take a pause here. Just pause the video, please. Please like, comment, subscribe, share this video. Please share this video. You know, I'm doing this because I really enjoy it. I'm doing this because I really want to help you guys. If you guys like this video, please thumb it up. Please hit the bell, I don't know, and then press the subscribe button. Thank you so much. Anyway, let's move on to silver. All right, and silver is silver is very beautiful, honestly, because silver is very interesting. So what I want to talk about is so I did further analysis on the prior moves outside of the Bollinger Bands for silver. So what Bollinger Bands are is that it takes the standard deviation to the upside, and it takes a standard deviation from the downside of the median price, right? So when silver closes above the top standard deviation Bollinger Band line, right? You take that close and then you move it all the way to the initial to the ending close of that move, and you see that within 16 days it touches the 61.8% line. You can see that this bottom line right here is 61.8%. Now, it's very important to see that, because when you see that that silver moves in a predictable way, you can predict it and try to emulate that same process in the future. So we see that in July, it had a huge move, beautiful move to the upside, absolutely just ridiculous. I was astonished. I was in love with silver. All right, so it moved from here to all the way to July 24th was the move, right? And then by August 1st, it touched the 61.8% line, the Fibonacci retracement, and then it ended up dipping below. All right, so that's 16 days. So within 16 days of it first closing, outside of the Bollinger Band, it ended up touching that point. Now, why is that important? Right? You could have another interesting thing that I found out was that once the silver closes on a red, once it opens right here and it closes within that Bollinger Band after being completely oversold for so long, overbought for so long, it takes very little time for it to touch the 61.8% level. So if you were to buy puts and you were to go short at this level, you would be in profit by the time this came around. You could take profit, and this is a clear-cut pattern that worked. So now here, you do the same thing, the same move, different move, but the same concept. You take the high of the first day closing outside of the Bollinger Band up until the end of this move, up till September 4th, right? You calculate 61.8%, and then you see again, not 16 days, it happened a little sooner. It happened within 11 days. The silver price dropped back, and it touched the 61.8% level. Not only did it touch that level, it closed into it, and then it ended up giving all of its gains back, right? So you would have lost money if you didn't, if you were long, right? But again, now if you were short, going back with the same thing that I said earlier. If you bought puts and if you went short when silver first opened within the upper B bands and then closed within the upper B bands, right? If you bought puts right here, you would be in amazing profit because within one day it dropped from 18 all the way to 1680, and that's within one day, which is completely amazing. Now what you could have done was you could have, you know, sold some at the 50% mark, you could have sold some more, and then you could have held the rest out and see where the rest would take you. But either way, that is an extremely beautiful chart pattern that I am going to be looking at for this move recently, because silver did the same thing. So now within 11 to 16 days, I'm looking for silver to touch the 61.8% level of this new move. So now what I want to look at is this new move. I'm going to look at the daily chart on this move, and you take it right here. The high of day for when it closed, which was 1630. You take it to the top of the move, and you see all of these candles are completely out of the Bollinger Band, which is extremely, extremely overbought. And mathematically, the markets and the computers doing all of this, keeping all of these, creating all of these markets, essentially, they want the stocks to trade within this Bollinger Band. They want it to trade within this area. So when you see it outside of it, you can generally think that it's going to return inside, right? So you take this level, you take the Fibonacci retracement, and then you see that within, what I want to see is within 11 to 16 days, I want to see silver touch 16.5, right? I want to see it touch 16.5 and then go below it to the 78.6% level, right? And now what we're looking for is silver did exactly what it did the last two times. It opened within the Bollinger Band, red, and then it closed red, which was extremely perfect. So now what we're looking for is a move to the downside. So what you could have done in this case, right, to make a trade, you could have bought puts at the open, which was at 1677. Could have bought puts at the open. You could have made a stop loss for 1686, which is a 9-cent loss, right? In exchange for a potential 27% win to the 61.8 level, or a potential 36% win to the 78.6% level, which are both extremely beautiful, low risk, high reward trades. 3-1, 4-1. That's what we're looking for here. We don't look for any. We don't gamble here. We don't want any trades that aren't in our favor. We see exactly what we're trying to do here, and we see prior price movement. We see historical data, and we emulate that, and we have tight stops. We're not here to lose money. We're here to make money, right? So that's what I want to look at on the short term, right? I'm looking for a move to 16.5, 16.42, and it's very important to see that silver might be going down, because as we just saw earlier, the SPY was going up. So now it's important to understand this relationship. When the SPY or the overall market is doing very, very well, right? People take their money out of precious metals and then they want to invest it into stocks, right? Now, when stocks aren't doing very well, when you see that there are huge red days, you can see that people take money out of stocks and put it into precious metals, which is why you see an inverse relationship in the price of SPY, of the S&P 500, and silver and gold and various other, precious metals. So, with silver, you can see that it is also trading not triangularly; it's trading in flags, right? You can see a bearish flag here, traded almost perfectly. You can see that this is one huge, giant bull flag, starting from May 28th all the way to the high, 1834, which is in September, right? You can see that. And then I have price targets for both. I have a conservative price target of around $20. I believe that's where silver is going to go in the near future. If SPY doesn't do well this year, I see silver touching $20 very easily. Because that's going to be also a very key psychological level. If we can break 19 even, right, the steam from 19 will definitely propel us to 20, in my opinion, right? There's no definites again in the market. Let me take my word back. But it's very likely based off of this chart pattern, based off of this long dragged out pattern as well. It looks very beautiful. And the fact that, precious metals trade very flaggishly currently, you can see that as a price target to 20 or to 19 at least, right? Either way, very beautiful. Right now it's trading at 1670, right? If you were to go long right now and wait for it to touch 20, that's a lot of money that you would have made. Right, so that's silver. And what I want to look at now is GDX, which is the look at this flag. Look at this beautiful flag. Like this is textbook, just amazing. This is beautiful. Like literally, like the markets are just handing it to us at this point, right? So, it's another huge flag, right? Not a red flag, right? But a good. It's a green flag. It's a bullish flag, right? So, right, you take the again, you take the perpendicular line of this flag to get the price target. You take the perpendicular line, and then you put it at the break of this line to get one price target, and then you can take the entire length of the flagpole and then you put it at the breakout point to get the other target, right? So now these are the two targets. You take this line and convert it here. The first target would be 32.54. The second target based off of this line right here would be 38. Both very plausible potential numbers, only because if the SPY drops down in 2020, gold and silver are going to pop off, and these prices are very doable. So now if you look at the most recent swing low to the most recent swing high of when this entire chart pattern formed, right, you see that so gold traded a bit more, not as fine, but it traded a bit, like it traded differently. So what happened was it initially broke down below the 38.2% Fibonacci retracement level, and it was trading between the 38.2 and the 50%, right? Which is generally a good sign, because when the stock market is at all-time highs, you don't want to see gold or precious metals retreat back all the way, right? So it held within 38.2 and 50% really well. And then at the end of November, it broke into the 38.2 level, and then it began trading within 23.6 and 38.2. Again, it showed like a lot of strength, which was very good. A very good sign. If you bought down here, this is where smart money would buy. This right here would be where smart money would buy. You would wait for a reversal and a bounce off of this level, and you could have got in on December 23rd at this level right here. Perfect buy. Really nice. You could have got in at 27. You could have bought at 27. Really nice. And now it's at 29 within like a week and a half. So it broke the 23.6% level, and now it is oversold in that level. It's not looking too good outside of the Bollinger Bands, because the Bollinger Bands, again, these equities and these huge markets, they want to see the securities trade within the Bollinger Bands. Now when they don't trade within it, they want to. So it's very important to see that it's not looking too good for gold right now, because short term it's looking very good for the stock market, right? Now if close this right here, you can get a better view of GDX working in oversold, right? So when it is oversold with the RSI, boom, it falls back out. All right, outside of the Bollinger Bands, it can't remain for too long. Boom, it falls right back down to the 20 EMA. Boom, falls right back down to the 20 EMA. Right? It was oversold again. Or yeah, it was overbought again. Right? Outside of the Bollinger Bands, completely overextended. Right? The RSI barely touched oversold, and then it dropped right back down below the 20 EMA. Boom, right again. The RSI is oversold. RSI is overbought. It's outside of the Bollinger Band. Boom, touches that again. That is huge moves. Constant huge moves based off of this entire chart form. So now you do that same thing and you have that same concept. You can see the line curl completely off of this top resistance level for the RSI, which is the overbought. It's outside of the Bollinger Band. So you could have put 2 and 2 together. You could have seen the MACD completely overextended. Very, very unsafe to go long here. Very, very good short. You see that? And boom. And then all the way, the percentage move to the 20 moving average. You know, by the time it comes back here, by the time like the price moves up, the 20 moving average will probably be like 5.5 or 6% away, which is a very, very good gain based off of charting analysis, based off of technical analysis, based off of your understanding of the SPY, silver, gold, precious metals, where the market is going. It's a really, really good time to trade. It's a really, really good time to make a lot of money on the market. And I really, really hope that everyone had an amazing year. I'm going to try to make daily videos. I'm going to try to make videos as much as possible. And I want to start the new year very, very strong. So if you like this video, please like it. Please subscribe. Comment down below anything that I can do differently. If you are interested in me doing any analysis on any stocks that you're interested in, please let me know in the comment section below. I will definitely get back to you. And I really, really look forward to constantly doing these and being in touch with you all. So thank you so much. Have a great year and have a great new year.